Let's expand the picture for you. Oil prices climbed by more than 1% today as world's top oil importer, China, flags its first move towards a losing monetary policy stance since 2010. The London Brent crude futures were up 1.4% to $72.12 a barrel at 13:56 GMT. The U.S. West Texas Intermediate crude futures were up 1.6% to $68.29. In the meantime, the overthrow of Syria's President Assad has added fuel to the region's uncertainty. Just as the global market was still digesting last Thursday's OPEC Plus final decisions of the year. Let me put all of this and more to my guest in Dubai, Amena Bakr, a senior research analyst at Energy Intelligence. A great evening to you, madam.
Good evening. Thank you so much for having me.
Thanks for coming through. We appreciate making up the time late tonight for this conversation. Let's start from where we are right now in Syria. What is the market making of the end of President Assad's 50 years regime and what may likely follow?
Well, the market isn't really reacting to the news of President Assad. We just received information today that he is currently in Moscow. And the situation in Syria remains very volatile. I mean, nobody could really tell you what's happening on the ground there or how the transition of power is going to end up. So there's a lot of lack of clarity on the ground, a lot of confusion to some extent. So in terms of oil markets, we're not seeing a very big reaction. But I'd just like to add, just generally, this year, the market has been more or less divorced from any kind of geopolitical tension, meaning that whenever we have any kind of changes that are happening in the region geopolitically, that hasn't been reflected into prices.
So the question is why?
The same reaction.
Why is that so? Because it's been quite unusual. If you go back to the 70s, for example, if you drop a bullet in the Middle East, if you drop a glass of water, it's going to cause upset in the global market. What's changing? What has changed?
Absolutely. You're completely right. I mean, a decade ago, if you said there is war in the Middle East, you would have immediately see a reaction in prices. But right now, we're having this kind of detachment. And I think Saudi Arabia's energy minister, Prince Abdulaziz, said it quite correctly that the market is being hijacked by negative sentiment. So I think that's the case right now. There's a lot of negative sentiment over where demand is going in 2025. So that's overpowering the market to some degree.
Interesting. So tell me, Amena, what's been the biggest headlines of 2024 for you and why?
Great question. The biggest headlines, I would say, are around OPEC and OPEC's management to the market. I mean, you mentioned the recent OPEC decision, which I see as a very comprehensive decision. It puts a forward-looking map, if you like, in front of traders, investors. What the industry likes is to have a price that is not volatile. So having that roadmap until 2026 is really important. But at the same time, it tells you that there are still question marks over demand and how China is going to react in 2025. The data still doesn't support a huge amount of growth. So that uncertainty is prompting a very cautious approach from OPEC, which I think is very prudent. So in terms of headlines this year, I think OPEC's market management was excellent. And something else that, I mean, of course, grabbed the headlines very, very much this year, perhaps it's not very, related to the energy sector, but Trump coming back to office and being president in 2025, that's much awaited. And you get asked a lot, what does that mean for energy markets in terms of shale production, but also in terms of policy and how it would impact oil prices.
So do we have clarity as to where the market's really going in terms of demand and supply moving forward? There's always a bit of a divergence in the manner of speaking between OPEC data as well as the International Energy Agency. What do you make of that? That comes a whole lot through the year for me. So is that the same for you? Does that give us a sense of the actual data that we can use moving forward?
I think, this divergence is more or less going to stay the same, I think, into 2025. You're still seeing OPEC or the Secretariat put out numbers that are very much on the bullish side. The EIA are on the kind of bearish side. It would be great to reconcile that. And I think, at some point, the fundamentals are not bad here. Demand is not collapsing. So there will be some kind of catch-up happening between the fundamentals and where the market is going. And hopefully that brings additional stability to prices.
Do you see some of the headwinds of the outgoing 2024 the global market shaping the incoming year 2025? I'm sure the Middle East crisis will still most likely be there in the new year. The Russia-Ukraine war is not over yet. So do you see more of these, or you see the continuation of these being part of the headwinds into next year, even including a bit of a softening in growth outlook for China?
Yes, absolutely. We're taking kind of the tail end of 2024 into 25. All of these factors that you mentioned are going to be brought up again in the next year. And starting with that with U.S. President Trump coming into office, we're still expecting him to press Iran with additional sanctions. It's true that it might not impact their exports so much because they do have a shadow fleet. They do have a way around sanctions, which has, been tested for years. However, it might shift sentiment, and the market might realize that there is a risk premium here. So we might see an upward tick in prices, let alone, the situation that's happening in Syria. Nobody knows really how this is going to be resolved, who's going to be in power. Is a civil war going to erupt? All eyes are on Syria for other reasons too. Don't forget that Iran used to export a lot of products to Syria. Now it's unclear who's going to be supplying Syria. And it's unclear also if the U.S. is going to be removing its sanctions off of Syria, which would allow the development of the country and the development of some of the fields happening. So a lot of uncertainty, again, going into 2025. And at the top of the list, as you correctly mentioned, is demand from Asia, primarily from China. How is that going to recover?
Very interesting, Amena. So what is your outlook for Africa's oil producers for the new year 2025 at Energy Intelligence?
I think African producers are in a really advantageous post right here. We're seeing demand for their oil still quite strong. And I'm just attending, both of us were actually in Cape Town attending the Africa Energy Week, and you saw the number of projects that are being brought up, whether it's from Namibia or Nigeria, willing to bring back its production. So I'm seeing a lot of interest in building capacity, and this capacity will be needed. I don't believe that these resources are going to be locked in the ground because of lack of demand. It's the time for African producers to start investing and producing more.
Well, the flip side of that, Amena, is that there are a lot of African oil producers that are also importers as well, such as Nigeria, Angola, Ghana, and virtually South Africa is getting in on the game as well as others. So what should Africa's oil importers prepare for in the new year as we look at the Middle East crisis, the crisis in Russia not moving, oil prices towards $90, $100 per barrel, still cruising around 70, rebalancing around 80, and getting in at a 17 and 80 handle?
Yeah, I think, if you're talking from an importer's point of view, keeping the price range in the kind of $70 up to $80, that's more or less seen like fair by producers and consumers, and that's going to help keep inflation, under control. So I think that African producers, like any or importers, just to take 2025 with a lot of caution and manage all the risks ahead.
Yeah, take 2025 with a lot of caution. Is there a price outlook in terms of what 2025 will look like at Energy Intelligence? Do you have a price band in view?
Currently, we're staying around $75. This is the kind of, price that we're looking at. Of course, we adjust our prices as well as our demand and supply forecasts as the year goes round.
Okay, to summarize back, how do you think OPEC will, we've got the end of year, things are moved further down into 2025. So do you think the coast is clear for OPEC now into the new year, in a manner of speaking?
Well, I think OPEC will keep an eye on where stocks are at. There is a window for them to start unwinding some of these cuts, hopefully by the time frame they plan. The current plan to do that is after the first quarter. Of course, they're going to be assessing the market, but I'm telling you from now, I think the group is going to continue this very, very cautious path. So if they see prices sliding or there is no recovery from demand, I wouldn't be surprised if they push back the unwinding again.
All right, thank you so much, Amena, for those industry insights and perspectives on the global oil market list. Thank you so much. Have a great evening out there in Dubai. Amena Bakr, Senior Research Analyst at Energy Intelligence.